What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing into the stock market. This video is going to be about dividend stocks, okay? How to tell if a dividend stock is a good investment. Well, if you ask me, a good investment, you never have to sell, okay? That's one of the indicators, all right? Now, at least for fundamental reasons related to the actual stock itself, and not to someone's personal life events where they need to sell and get some money right away. So this video, I'm going to go over 3 different stocks that are dividend stocks, and if I was a dividend investor, which ones I would pick in different situations. Okay. With that being said, let's get into it. All right. HPQ, Hewlett Packard. You probably know this company through their printers and paper manufacturing, etc. This is an example of a stock I would pick, and I'm gonna explain why. All right. So, a lot of dividend investors would go straight to the dividend overview tab, but there's a little more to it than that. Here's what I would do to look in to see if this is the stock for me. All right. Your 3 different financial statements on the income statement, balance sheet, and cash flow. For the income statement, this is what I'm going to briefly look at. All right. And I'm going to maximize this for full effect, for full visual effect. All right. Let me see here. Bear with me. Okay. So, briefly looking at their revenues. Revenues are flat. That's fine. Okay. Now, going down here, this is one of the big things I look at. Diluted weighted average shares outstanding. From 10 years ago to now, have the shares decreased, and how fast are they decreasing? Okay. Well, they're nearly getting cut in half every 10 years. So to me, that's very attractive. If you want the stock to go up, this is a way to do it if they have stagnant revenues and they're a mature company. All right. So that's on the checklist. Stock will continue to go up, and this is why. They're one of the main indicators of why. All right. Now that we got that out of the way, let's go to our cash flow statement. The dividends, don't be fooled. They're not correlated to revenues and actual net income. When it comes to dividend analysis, I'm more concerned about free cash flows. And let's keep it simple. All right. We'll go back to our summary. If the forward dividend rate is $1.10 a share, I will go back to the cash flow statement and I will look at free cash flow per share. If there's enough ample room to sustain $1.10 a share, that means their free cash flows are going to be able to maintain paying out the dividend. If the free cash flows are seeing slight growth, that's really all you need, okay? And if they're paying $1.10 a share and they're free cash flowing $3.55 a share, you know there's plenty of room to grow it, okay? So this company is a hybrid between buybacks and dividends. Now, here's the thing to consider. I look at HPQ as a dividend stock, or a growth stock disguised as a dividend stock, or a hybrid thereof. All right. If they're decreasing the share count and still growing their EPS, and at the rate that they're decreasing that share count, I could probably expect the stock to about double every 5 to 7 years. All right. Now, valuation. If we go down to their cash and their balance sheet, these companies do not need to have a lot of cash on the balance sheet. because they're depending on free cash flows, and that's fine. So I'm not really too worried about the balance sheet, especially if they're such a mature company with good free cash flows. I automatically know they're going to be good to go. If we look at the dividends, the payout ratio is another tool. If we look at the dividend tool on Seeking Alpha, the payout ratio is another indicator. All right. And that's pretty much aligned with the free cash flow per share and what we just talked about. All right. They have a solid growth history of 13 years of growth, and they're growing this on a 5-year average of 11.93%. If there was a dividend stock I would pick, and I was at the beginning phases of transitioning my growth portfolio and growth of capital over to dividends, HPQ would definitely be in my portfolio. All right, now that we got that out of the way, if you're not too concerned with the stock going up, and you're okay with just preserving the capital and the stock being flat, but realizing the actual profits of dividends at a higher yield, and to where you're going to have to depend on these dividends to live, well, Altria Group might be a good candidate. All right. Same idea. We'll go to the financial statement. All right. Briefly look at the revenues. They look flat to going up a little. That's good. We'll go to our basic weighted average share count, going down ever so slightly, and that's good. All right. Main thing, cash flow statement for dividends. We're going to go all the way down, and we're going to look at the free cash flows and make sure they're going up or going up ever so slightly, and they have enough to cover the dividend. Free cash flow per share is $6. Okay. We'll go back. Look at their actual their dividend rate is $4.08. Once again, we'll go back to the cash flows, and we go to free cash flow per share. It looks like they can sustain a $4 and whatever cent dividend. Okay, so there that is. But go to the actual valuation itself. Quick balance sheet check. Once again, they do not need to have a lot of cash on the balance sheet. All right. So there it is. If you're looking for a dividend stock that has a high yield and you can depend on the dividend, and you're not really too concerned with the stock going up, and it'll just be flattish, okay, but you're eating off the actual dividend yield and depending on it to live, maybe Altria is the stock for you. Now let's go to the younger dividend group investors. Google. All right. If you are interested in dividend growth, which means dividends are your primary strategy, but you don't need to live off the dividends until decades from now, maybe 15, 20 years, maybe 10 years, whatever your horizon is, and you're just interested in dividend growth and the stock going up, Google may be an actual prime candidate for this. All right. So if we go to their financials, we're going to do the same thing. Revenues. These are dramatic increases in revenues. Okay. This is still a growing company. All right. We'll go to basic weighted average shares outstanding. Shares are going down, but ever so slightly. Okay. All right, so that's good. We'll go to our cash flows. We'll go down to our free cash flows. We'll look at that. Their free cash flows are growing dramatically. All right. Free cash flow per share, $4.88. We'll go back to their dividend rate. If you're seeing a little pattern here, that's good. We'll go back to their dividend rate. They're doing 80 cents of dividends per share. Once again, we'll go back to the financials, into the cash flows. If they're free cash flowing $4.88 per share, they can easily cover that dividend, and there's plenty of room to grow it. All right. Now, we'll go to the dividend tab. All right. no history. All right. However, with this actual company, I am not concerned about their dividend growth and their ability to pay and so forth. Their payout ratio right now is 2.87%. We'll go to the valuation, look at the balance sheet real quick. They have net access cash. They have 100 billion in cash. All right, and 28 billion in debt. If the company is dramatically growing and they have this good balance sheet and they're just in very strong growing free cash flows, they're probably going to grow this dividend very fast, and the shares will go up too. All right, so let's go back and minimize this. This was a quick introduction of how do I think a dividend stock is a good investment. Okay, if I was interested in dividend growth and I'm a young man, all right, maybe in my 20s, early 30s or so forth, depending on your horizon and your personal situation, you know, these are the stocks that you would probably. This is the pretty much overview of the idea of what I would look at to be a good investment. I hope you got value out of this video. I'm going to do more instructionals on this segment on different types of stocks. If you want to learn what value creation is in the stock market and how it works, maybe this is the channel for you. As an investor personally, this channel is more tailored towards way more advanced investing strategies, tailored towards more mid and small cap growth companies. But you can still gain value and knowledge. Okay, so consider subscribing, thumbs up. Thank you for your time. And with that being said, have a good day.